Hello guys, welcome to the Mustang Financial Market Academy Financial Market Training Chapter 2. This is our week 2, course 2, and we are going to be looking at the market structure and price action. Hopefully by the end of this class and this short video, you should be able to understand support and resistance, identify trends, uptrends, downtrends, and ranging. Read market structure, the higher highs and the higher lows, and the lower highs and the lower lows. Understand basic supply and demand zone. Now, let's get into the course. What is price action? Price action is the study of how price moves on a chart without relying heavily on indicators. In simple terms, it's about reading the story of the market directly from the price movement. So when you see your candlesticks going up, going down, going up, going down, showing you red or green or whatever color you have used to understand the market, it's a story it's telling you. And the earlier you realize that the story of the market is in its movement, the easier for you to read charts and know how to place your trades and where and when to place your trades. Support and resistance. Support is a price level where the market tends to stop falling and bounce up. Think of it as a floor. While resistance is a price level where the market tends to stop rising and reverses downwards. Think of it as a ceiling. Now, support and resistance goes in two ways. You have support and resistance when you want to buy, and you have stop and resistance when you want to sell. This is a definition for support and resistance when you want to buy. When you want to buy, the support is placed below. All of these are going to be detailed in the course training. Just register and apply on the link below. When you buy, your support is below, and when you sell, I'm sorry, and your resistance is above. When you sell, your support is above and your resistance is below. So that's how it works. So let's say a vice versa for sell is your price level is where the markets tend to stop rising and bounce back down. That is when you are selling. And resistance is when the price level of the market tends to stop falling and reverses back upwards. So that's how your resistance is for sell market. Key tips is the more times price touches a level, the stronger it becomes, and support can turn into resistance at any time. So that's how it works, and vice versa. These levels helps identify entry and exit points. Trends. A trend shows the general direction of the market. We have the uptrend bullish market now, which is also the bullish market. Price makes higher highs and higher lows, and buyers are in control. An uptrend market, you see higher highs and higher lows, while in and buyers obviously control that kind of market. The strategy is you look for buy opportunities, and in downtrend markets, bearish market is also known as downtrend markets, and prices make lower highs and lower low. That's in your sellers category, and lower low sellers control in this market. They're in control of this market. The strategy is to look for selling opportunities, ranging opportunities. Ranging market is also sideways. Price moves between support and resistance. That is where you have the price consolidation. That's where prices are consolidating and there is no specific direction for the price market at that point in time. So the price moves between support and resistance and no clear direction. So strategy is buy at support and sell at resistance. So that's how you do it. You either buy at support and sell at resistance, or you don't even enter at all until you are pro enough to place those kind of trades. So yeah, market structure now. All of this will be explained detailed in the course training. All you have to do is register through the link below, or you find out about registration through the link below. That's all you have to do. Excuse me. Market structure helps you confirm trends and predict directions. Key terms of a market structure is higher high, new peak high, new peak higher than the previous high, and higher low, pullback higher than the previous low. You understand? If that's still going to be explained in the course training, I can't give much details here. Lower high, lower peak than previous low, than the previous lower high, and lower low, new low, below previous lower low. How it works is uptrend structure is higher high, higher low, higher high, higher low. So that's how you get an uptrend, and it indicates strong buy. You don't just do higher high, higher low by just one indication. It has to be double indications or triple indications that signifies that this is indeed a strong bullish market. And downtrend is the same thing. Lower low, lower high, lower low, lower high. It indicates strong selling pressure. And important concepts for market structure is a break in structure. Price stops making higher high and starts making lower low. And it can signify a trend reversal. So you have to be very careful and watchful. Supply and demand is also another thing we'll look at in this course. Supply and demand basics. This is one of the most powerful concepts in trading. Even if you don't understand other blocks or other kind of trading, analysis and the rest, supply and demand would help you a lot in placing your trades, entries, and all of that. So supply and demand is the most powerful concept in trading. Supply zone is the area where selling pressure is strong. Supply zone is the area where selling pressure is strong, and price often drops here. Think institutions are selling. Think of it as institutions are selling, and demand zone is also the area where buying pressure is strong. Price often rises from here. And also think of it as institution buying, just like I said earlier in the first class, that big institutions, decide the major moves in the market, and individual traders like us just react to these moves, and some of us benefit of it and some of us cry from it. So that's it. That's the risk of trading. Key insights of supply and demand is supply is equal to resistance, but stronger concept, while demand is equal to support, but smarter interpretation. These zones often cause sharp moves. So when you interpret your demand and support very well, your demand and supply very well. So, pardon me, you understand better when you interpret your supply and resistance very well. You understand better. So putting all of this together, to trade effectively, you need to identify the trend, mark support and resistance or supply and demand zones, confirm the market structure, the higher high and higher low, lower high and lower low, and enter trades in the direction of the trend. Enter trade in the direction of the trends. So summary for this week is price action is reading raw price movements. Basically, whatever you see on your charts is whatever is happening in the price or in the financial market as at that moment, as at that minute, that second, and that hour. Support and resistance act as key levels, and trend show market directions. Market structure confirms trend strength, and supply and demand zones reveal institutional activities. So that's basically what happens in supply and demand zone. They review institutional activities. Thank you for joining this class, and I hope to see you in the next class. Also, remember to register or inquire through the links that will be on the description below. Thank you.